Okay, chapter 11, accounting for incomplete records and single entry system. So what you're going to learn in chapter 11 is the definitions, the determination of profit or loss using capital comparison method and analysis method, and also the preparation of financial statement. Okay, the definitions for incomplete records and single entry system. Okay, so incomplete records here means the transaction is not recorded properly, or maybe some of the records have been lost or destroyed. So the company may be keeping very simple records such as cash disbursement, cash receipt, checkbook, suppliers invoices, and also debtors records. As for single entry system, the business owners do have a complete business record, but it does not have a double entry system. So the record that they have is the cash book, the debtors and creditors record, and also the asset and liabilities. The disadvantages of incomplete records and single entry system. Okay, one, you are not able to prepare the trial balance. The information related to assets and liabilities are not reliable. Profit or loss cannot be ascertained or cannot be determined. It is difficult to evaluate the company's performance, and fraud and corruption can be easily occurred. So how we determine the profit or loss in chapter 11? There are two methods that can be used. One is the simple ones, that is the capital comparison method, where you compare the beginning and also the ending capital of the business, and the main basis is to see whether you got an increase or a decrease, that is the reduction, which shows the profit or loss in the business. So to get the profit or loss in this method, we need to minus the beginning capital from the ending capital. The other method that we're going to use is the analysis method. So you are given more informations compared to the capital comparison method, whereas you can do the adjustments to find the amount for your sales, purchases, revenue and expenses, and you are able to find all the informations because you are given the cash book or the bank book statements, and you also have the inventory records as well. So steps in using capital comparison method. Okay, step 1, you need to calculate the beginning capital, and then you need to calculate the ending capital. So by having 1 and 2, you are able to calculate the profit or losses, and then you are able to prepare the statement for financial position. So if I were to calculate the beginning capital in the question, I need to total up my beginning assets, and I will I will minus my total for beginning liabilities. So I'll be doing the same thing for my ending capital as well, where I'll total up all my ending assets, and I'll subtract that with the total ending liabilities. So we go to the first example. Okay, in example 1, you are given only two simple information, that is the beginning capital and also the ending capital. So you are supposed to calculate the profit or loss for the year ended 31st December 2016. So how do you do the statement for comprehensive income? You just simply take the capital as at 31st December 2016, 5,600, and we will deduct the amount of the beginning capital as at 1st January 2016, that is 4,000 ringgit. So you can come down with the net profit amount, which is 1,600 ringgit. Okay, alright, we'll go to example 2 using the same method, that is the capital comparison method. only that in this example you are given more information. You have the information on the drawings and also additional capital. So we are supposed to calculate the profit or loss for this example. So we'll take the ending capital and we'll add up our drawings. So this is component A, and then you have your additional capital. You'll add up your additional capital with your beginning capital, and this is component B, right? So to get your profit or loss, you'll take your component A, will subtract with the component B, and you'll get your net profit. Okay, this is the way to calculate the net profit using capital comparison method when you are given more than just the ending capital and also the beginning capital amount. Okay, we go to example 3. So in example 3, you are given the balance for your assets and liabilities as at 30th June 2011. And we are supposed to calculate the amount for your beginning capital. This is your beginning capital, alright, and then you'll use the amount that you get in the beginning capital to calculate the net profit or loss. And we are supposed to calculate the non-current liabilities on the closing date. So this is the information given for 1st July 2010. So you have a total for your total for your current assets, your non-current assets, and also for your total liabilities. So this is actually your beginning balance. So the solution for example 3, to calculate your beginning capital, you'll take your total beginning assets, we'll minus it with your total beginning liabilities. So your beginning asset, this is the total for your non-current asset. Sorry, this is the total for your current asset. So we'll add up to the non-current asset amount as well, and we'll minus it with our total beginning liabilities. So the beginning capital for 1st July 2010 is 465,000 ringgit. So the profit or loss in this business will be your ending capital plus drawings minus beginning capital. So your ending capital is 268 ringgit plus your drawings 102,000 ringgit minus the beginning capital you calculated earlier. Okay, so this ending capital is actually a calculations made using all the ending amount that you got from the question earlier. Okay, so we get a loss of 97,000 ringgit. Okay, so as you can see here, alright, this is how I came out with my ending capital. Okay, so my asset amount is 365 ringgit and 369,005 ringgit. Okay, so I have my beginning capital earlier, I minus it with my net loss, and I'll minus the drawing as well. So we have our ending capital, that is 268,000. So this is the calculations for your liabilities. So earlier you already have a total for your asset, that is 396,500. So your liabilities and owner's equity should have the same sum of the same amount, that is also 396,500 ringgit. But in the question you only have informations on your current liabilities. Okay, so that means we have your 396,500 ringgit minus your current liabilities. This is your current liabilities, and this is your owner's equity, your ending capital. So we came down to the amount for your non-current liabilities, that is 78,000 ringgit. Okay, so this is to answer Roman 3. So this is example 3. So we go to another example, the additional example for capital comparison method. So you have a balance. This is your beginning balance for all your assets and liability, and this is your ending balance. So this is your asset, asset. This is your liabilities, asset, liabilities, asset, and asset. Okay. So additional informations, you have drawings. This is your cash drawings of 310 ringgit, and then you have a merchandise drawing of 400 ringgit. So your drawings is actually 710. This is your bad debt expense, so this amount will be deducted from your accounts receivable towards the end of the accounting period. So any reduction in non-current asset is actually your depreciation expense. So as you can see in the question earlier, the beginning asset, the beginning non-current asset, for example for equipment, is 15,200, but the ending balance is 14,100. That means the difference of these two amounts is actually the depreciation expense. And you have one more payable here, that is your telephone bill. Okay, so we are supposed to calculate the beginning capital, the ending capital, your profit or loss, and also build up your financial position statement. So steps as usual, you need to calculate your beginning capital and then your ending capital, and then only we move on to preparing our financial statements. So your beginning capital is 48,430. So all these amounts are taken from the beginning balance as at 1st January 2015. So I'm down to this amount, that is my beginning capital. Okay, next we will calculate our ending capital. So for my ending capital, I will accumulate all my ending asset. Okay, and as for my accounts receivable, I need to subtract with the bad debt expense so that I'll get the balance towards the end of the accounting period. So total asset is 50,370 minus the ending liabilities. So my ending capital on 31st December 2015 is 44,270. So we will prepare our profit or loss statement. So you have your ending capital of 44,270 plus drawings. So you will add up both drawings, and then we will minus the beginning capital, because we don't have any additional capital, so we straight away minus the beginning capital from component A. So you have a net loss of 3,450. So for your profit or loss statement, your non-current asset and then you have your current asset. So the total asset is 50,370 ringgit. As for your liabilities and owner's equity, for owner's equity, you have your beginning capital minus your net loss minus your drawings. So your ending capital is actually 44,270, and then we'll add up to our current liabilities, so we come down to the same amount as your asset, that is 50,370. So these are the ways to do the solutions for questions using capital comparison method. Okay, next we will go to your analysis method. So in analysis method, you need to calculate all the informations by doing the analysis related to sales, purchases, expenses, revenue, and also the cash books. So that means in this type of questions, besides having the balance for your assets and liabilities, you also need the informations given in the cash book. So to do the adjustments for my sales, I need to acquire the cash sales from my cash book, and I need to acquire my credit sales from my adjustments in the accounts receivable. Okay, so you can either use the calculations, normal calculations, or you can use the adjustment using a T account as below. Okay, we go to the example. Okay, so you have here your cash sales, and this is the cash received on your AR, beginning balance, and also your ending balance for your AR. So how do I do the adjustments to calculate my sales? So to find my credit sales, I need to open up an T account. Okay, so my beginning balance is 10,000 ringgit. Okay, so this amount 4,200 is taken from my cash book. So my ending balance is 15,000 ringgit. So this one will total up the amount of 19,200. So both sides will be the same amount. So the missing value is actually my sales, 9,200. And this is actually my credit sales. So how do I find the total sales? Okay, so to find my total sales, alright, I will take my cash sales in the question given and add up to this 9,200 ringgit. So my total sales is 9,600. So how do we find the amount for purchases? So we are doing the same thing as sales earlier. So to find your cash purchase, you need to refer to your cash book, and in order to find your credit purchase, you need to do adjustment in your accounts payable. Okay, so this is how you do the T account for your accounts payable. Okay, so the amount that we are looking for is your credit purchase. That will be in the credit side. So we go to the example. So this is your cash purchase, and then you have your cash paid, your beginning balance for your AP, and then your ending balance for your AP. Okay, so I need to do adjustments for my accounts receivable. So beginning balance will be on the credit side, 4,000 ringgit. Okay, this amount is taken from my cash book. Okay, but in this question we took it straight from the question given. And then you have your ending balance of 7,000 ringgit. So this one will total up with the amount of 11,200. So the credit side will also be having the same amount. So the missing value is actually your credit purchase, 7,200. So your total purchase will be your cash purchase plus credit purchase, that is 7,200 plus 600 ringgit, so 7,800. Okay, these are the adjustment that you need to do for your AP and AR in order to find your sales and purchase amount. Next we go to expenses. So expenses analysis, you can either use T account or you can use the formula given below. Alright, if the expenses given in the balances is payable, so you need to take the cash paid in the cash book, will add up to the ending balance in the asset and liability balance given, and then we'll minus it with the beginning balance in the asset and liability balance given in the question. Okay, and if you are given a prepaid expenses, okay, so in order to find the current expenses, you need to take the cash paid in the cash book, and then we'll minus it with the ending balance for the prepaid expenses, and we will add up the beginning balance for the prepaid expenses. Okay, so as you can see, the items are put in order. It's just that the symbol is different according to either it's payable or expenses, prepaid expenses. Okay, alright, so if you are doing it in a form of T account, okay, so I'll be doing both expenses, that is payable and also prepaid, in one T account, but I'll segregate the items according to colors. Okay, let's say the item is prepaid, so the beginning balance will be put in the debit side, the credit balance will be put on the credit side. Okay, but if the expenses is payable, so the beginning balance will be in the credit side and the ending balance will be in the debit side. So the cash paid, the one that you acquire in your cash book, will be in the debit entry. Okay, so the item that we are looking for, that is actually the current expenses, which is going to be declared in your SOCI or your comprehensive income statement, is this one, the one in red, that is your current expenses. Okay, this is if you are using T account to calculate your current expenses. Okay, as for revenues, we have receivable and also unearned. So if you are finding the revenue for the current accounting period, so you'll take the cash receipt in your cash book, will add up to your ending balance of the revenue receivable, and then we minus it with the beginning balance of your revenue receivable. But if we are finding our unearned revenue, we'll take our cash receipt and we'll minus it with your ending balance of your unearned revenue, and we'll add up with our beginning balance of our unearned revenue. Okay, this is if you are using the formula. And if you are using the T account, we'll be doing the same thing, just like what we did in the expenses account, right? So if the balance given is receivable revenues, so the beginning balance will be in the debit side, because it is your asset actually, and the ending balance will be on the credit side. But if it's unearned revenues, that means it is liability, the beginning balance will be on the credit side and the ending balance will be on the debit side. So the cash you receive is on the credit side. So the amount that you are going to find to be put in your SOCI is actually on the debit side of the accounts. That is the current revenues, the one in red. Okay, Alright, so we look at example 6. Okay, this is the cash book for each company as at 31st December 2017. So this is the debit section, and this is the credit section. So these are all your receipt and these are all your payments. Okay, so you have your cash sales, you have your long-term loans, that means you applied for a loan and you receive the money, and then you have commission received, this is revenues, and you are also having drawings, salaries, rental and insurance. Okay, so we go to the other part, the other section of the question. That is the balance for your assets and liabilities. This is your beginning asset and liability balance. This is your ending asset and liability balance. So we have commission revenue receivable, rent payable. So these two accounts we need to do adjustment in order to find the current revenues and also to find the rent expense. Okay, so we are given additional informations. Okay, as you can see in the question earlier, okay, we are given the same amount in the beginning for the non-current asset and the ending for the non-current asset. So you haven't deducted the depreciation expense yet, and we are given the expenses for depreciation is at the rate of 10%. Okay, this is the drawing for inventories. So this is merchandise drawings worth 150. So this one will be deducted in your SOCI. Okay, and then you have bad debt expense of 250, and here it is informed earlier. As you can see in your cash book, you paid 1,500 for your insurance. Okay, so it is stated in the question, the insurance was paid starting from 1st September 2017. That means 1st September 2017 until 31st of December 2017. It's only 9, 10, 11, 12, 4 months. So the rest of the amount that you paid is actually prepaid insurance. So your current expenses will only be for 4 months. So you need to prepare the statement for comprehensive income and financial position. So as you can see in this question, you are given the balance for your assets and liabilities, and then you are given the balance for your cash book as well. So we'll be using analysis method. So when we are using analysis method, you need to follow the steps given. Okay, so you need to find your sales and then your purchase. Then we'll do adjustment to find the current revenues and also expenses, and then only we'll find our beginning capital. Then we are able to prepare our financial statement. Okay, so we'll do adjustment in your accounts receivable. This is taken from the question. Okay, and this one as well. So there is bad debt expense, which is need to be deducted from your accounts receivable. This is the amount taken from your cash book. So the missing amount for your sales is 19,220. So this is your credit sales. In your cash book, there is 12,000 of cash sales, and in the bank column there is another 7,800 sales. So this is actually your cash sales plus your credit sales. So total sales is 39,020 ringgit. For your credit purchase, you have your balance, and this amount here is taken from your cash book. We only have one amount there, that is 500 ringgit. Okay, so your credit purchase is 910 ringgit. So this is the amount taken from your cash book. This is in the cash column, and this is from the bank column. So we'll add up with the amount that you calculated earlier. in this accounts payable. So your total purchase is 5,660. So we need to do adjustment for the expenses. Okay, for insurance, the insurance expense is actually the amount that you paid, 1,500, and you minus it with your ending balance of your prepaid insurance. Okay, so as I said earlier, you paid 1,500 for 12 months. That means every month the amount is 125. So the amount that you already spent for the insurance starting from 1st September until 31st December is only 4 months. So the expenses is actually 125 times 4. Okay, that is 500 ringgit. So since we are paying the amount of 1,500, okay, sorry, this is 500 ringgit. Okay, so that means from your 1,500, 500 ringgit is your insurance expense, and the balance of it, that is 1,000 ringgit, is actually your prepaid insurance. Okay, so this is the amount that we're going to put in our income statement, the current expense for insurance. So this is your insurance expense, 500 ringgit, and this 1,000 ringgit we go to your financial position as your prepaid insurance. As for rental, okay, this is your cash paid plus balance CF minus balance BF, or if you are doing it in a form of T account, you have your balance here because this is payable, your ending is here. So this amount is taken from the cash book. The amount of cash paid is 1,400. So your rental expense is actually 900 ringgit. As for your commission revenue, okay, so this is your cash received plus your CF minus your BF. Or in a form of T account, this is your balance brought forward, this is your balance carry forward. Okay, so this cash amount is taken from your cash book, the credit part, which is actually the cash you receive. So the current revenues, commission revenue, is 10,750. So these three accounts need to be adjusted to find the current expenses and revenue, whereas for the rest of the items in the question, you have drawings, that is cash drawings and merchandise drawings, 450 ringgit. Your depreciation, okay, so you have two non-current assets, so each is depreciated at the rate of 10% per year. So this is the depreciation for premise, and this is the depreciation for fittings. And then you are given 250 as your bad debt expense in the additional information. So the calculations for beginning asset will be 79,580 for your beginning capital. So we will prepare our income statement. So this is your sales, and consider your net sales because you don't have any discounts or returns. Beginning inventory, this is your purchase, and you can see here I need to minus my merchandise drawing because this is a single entry system. So that means the company only record one-sided transaction. They only record drawings without deducting the same amount from purchase. So since the accounts is already closed, I need to do the adjustments in my income statement. So this item will be deducted from your purchase to get your net purchase. Okay, and then this is your ending inventory. So your cost of goods sold is 13,310. So you get the gross profit of 25,710. For the expenses, insurance is 500, Depreciation expense for premises is 4,500 and fittings is 463. Okay, salaries taken from the cash book. Rental, the adjustment we did earlier. Bad debt expense is the additional information in your question. So your net profit is 23,747, and this is the revenue that you did earlier. You find the revenues through your adjusting entries. So once you have your net profit, you'll transfer the amount to your financial position. So we need to list down all your non-current assets. Okay, we'll add up the amount to your current assets. So your total of asset is 114,137. As for owner's equity, the beginning capital you calculated earlier is 79,580. The net profit from the Sochi prepared earlier is 23,747, and then we will minus drawings again, but this is both cash and merchandise drawings. As for your merchandise drawing, you will deduct it once in your Sochi as well. So we got our ending capital of 102,877. And as for your non-current liability, you have your long-term loan. This amount is taken from your cash book, and this amount is taken from your liability balance. So we come down with the same amount of asset, that is 114,000 ringgit, 137. 114,137 ringgit. Okay, so this is how you do your financial statements using analysis method.